Good afternoon, guys. This is Sam, and I'll be hosting the Big Picture Macro and Simpler Scanner webinar. Could I start by getting a quick confirmation that you guys can see video and hear audio? All right, looks like we're all set. Thank you, guys. I appreciate it. All right, so I have a lot to show you guys today, so not a lot of lead in. We're just going to dive right on in. Essentially, just to kind of walk through what we're going to cover, we're going to start by looking at kind of a big picture macro point of view. I'll show you a couple things that I'm looking at there and just come to some general guidance in terms of what I think is a good top-down approach to macro, and then turning that into a trade. After that, we're going to cover the scanner, the simpler trading scanner, just so because that's so helpful in kind of finding the needle in the haystack in terms of trade setups. We'll cover creating a watch list, and then lastly, we'll put it all together and set up a trade by running through the charts. So let's dive right on in, guys. So thinking in macro. So macro is really just another word for kind of thinking in a big picture point of view, right? And with markets, I like to start by looking at the biggest markets first and then kind of following the natural flow down to the smaller markets. Now, a lot of folks may think that the stock market is one of the biggest markets out there. In reality, it's not that big, not compared to bigger markets like currencies and bonds. And so I do like to focus on these two markets, even though they're not markets I will really trade, right? I'm not really a bond trader, and I'm certainly not a Forex trader, but those markets here, these two markets here will help you in trading this market. As options traders, that's what we trade. So why is macro important? Well, because all markets are connected. For better or worse, they're all connected. And a string pulled in the east will have ripple effects everywhere else, kind of the butterfly effect for markets. Also, because the more information we have about the big markets, and keep in mind that's currencies and bonds, the better our decision making will be when it comes time to execute here. So pretty straight up. All right, so let's talk about the average retail trader, right? So I'm going to make a comparison here to the scanner in terms of searching for gold. Now, how many of you, maybe you're starting out, maybe you've been doing it for 20 years, and you remember starting out? How many of you started out like this? Kind of just fishing in a river, panning for gold. You stick your pan in the water near the edge, and you hope for you hope for a gold nugget there in a pile of rocks. It's pretty common. I would say that most of us, including myself when I first started trading, were these folks here. And what's some traits about these types of folks? Without any judgment whatsoever, but what are some typical traits about the average retail trader? Well, they have no idea where to search, hence the randomness of just stick the pan in the water. They have basic tools. Again, the old pan in the water. And the key thing that separates those who stick around and those who don't. If they go too long without finding a little bit of gold, they will give up. They'll say, it's not for me, too hard, not for me. The thing is, they were using basic tools and they had no idea where to search. So the odds of finding gold are just based on luck, essentially. This is what we aim to be here at Simpler. And, having joined the Simpler team, I can say for a fact that it turns you into a significantly better trader. You go from being those folks in the previous screen, panning for gold, and you can turn yourself into this machine. And I wish I knew what it was called. I just called it a gold separator, and it popped up, so I used it. But I think it has a name. But the idea here is you want to be efficient, right? You want to be efficient, and you want to be able to dump out all the junk. You see this big pile of junk over here? You want to be able to dump all that junk out and keep that gold for yourself. So Simpler offers the map and the tools for much more effective strategy. Not only do we know where to dig, but we have the heavy machinery. And in this case, in this convoluted analogy, it's strategies and indicators to get that gold out of the ground. Trammel, thank you. I'll try to remember that. So the truth about market gold. I'm going to just draw his telephone in here real quick, the antenna. The truth about market gold. Well, what is the gold that we search for as traders, right? And that gold is really just information. And data and information are not the same thing here, right? Data is just any data point. What is the price of Apple right now? That's data. How many shares of Apple were traded today? That's data. The information, however, is taking that data and filtering it out so that you end up with that bit of gold that we're looking for. So trading is all probabilities, guys. There's no sure things in the markets, but we can start to put the probabilities on our side. And if you do that over and over again, the probabilities will add up. So the key thing is to separate the signal from the noise. And we're about to dive in here. This is probably the last slide, but here's the truth, guys. The truth is that trading is difficult, and most cannot cut it. I'm not here to offer any type of false hope or anything like that. I can sit here in front of you guys because of work, and whether you've been trading for 20 years or whether you're just starting, if you project yourself forward into the future, you will get there with work. This is not an easy game. I will say that. But what I am here to do is to challenge your desire to compete in the world's biggest and best markets. And if that sentence kind of sparks a little something in you there, then you're already on the right track. All right, so what are we going to cover today? We're going to cover big picture macro from east to west, from bonds to stocks. So from China to our markets, from bonds to stocks, how to use a scanner, turning the scanner into results into a watch list that's actionable. And then we're going to review the charts kind of using the simpler method. So just kind of the template that we would follow here at Simpler. Now, of course, we have multiple traders here, so each trader will have their own style, but I do think that there is a kind of a simpler method that we can discuss, and just knowing that is more than enough to get started. So let's dive in. All right, let's start with some macro here. So I'm going to bring up this chart over here, and I'm charting it on TradingView just because I could do this one on TOS, but I already started doing it on TradingView. It basically translates the same, and then I'm going to show you one more chart after this, and it's going to be China. So what the chart that we're looking at here is a chart of the Nikkei. This is the Japanese, let's just call it the Japanese S&P. And you may ask yourself, well, why do I care, right? Well, it's Japanese, it's the Japan markets. I trade U.S. tech stocks. Who cares? Well, here's the thing with having that macro point of view is all of these markets, whether it's the Nikkei or whether it's the S&P, they're all connected, right? And so oftentimes, especially with the Nikkei, this one will lead a lot of markets. And the reason that it leads is kind of complex, and we won't get into it today. But think of it like the Russell of the world markets, right? So we have the Dow, we have the S&P, and we have the NAS. And in terms of speed, usually the NASDAQ leads, and the S&P is kind of in the middle, and then the Dow is usually behind. In terms of world markets, however, we can apply that same type of thinking, and we can say that the Nikkei will typically move first, and then world markets will follow. Not to say that Japan is that important, but it is a leading indicator. So let's dive into the significance of this chart. So going into this move here, most recently, we recently had a pretty big down move in the market, and then followed by a big up move in the market. So I just want to point out a couple of things to you guys here. One, on this chart, once we put in this high and this low, that allowed us to have a nice swing here that we could track, right? You see how everything is within the context of this swing? All price action is here, right? So we have a high, we have a low. We run a fib level here, a Fibonacci from high to low, and that gives us a 618 right here. So we already are building our information, right? And this is useful right about here, right? Right when you're trading here. So it's useful for all of this trade coming up. And so what is this telling us? Well, if you're unfamiliar with fib levels or Fibonacci, the 618 of the Fibonacci sequence tends to be a really, really important level. Essentially, if we had broken above this level on this test, we likely would have ran right into 2300 or 23,000 on this chart. But you can see here, if I zoom in, look how many times we try to knock on that door. Also, keep in mind, there's no other levels on this chart. Just to speak to the importance of Fibonacci for a second, our moving averages are here. Our previous high is here, yet it stops right here. The only real significance around that level is that 618. And the key thing here is you can see it goes into it, fails, goes into it, fails, goes into it, and then finally gives up. So once we see this dynamic going on in Japan, it gets our attention, right? Because you have a couple of days here to say, okay, is it going to get through? Is it not going to get through? And then you get to about here and it's failed 2 or 3 times to break that level. It gives you more confidence that the markets are going to roll. And this actually led our markets lower. Once we broke down here, this led our markets and world markets lower. So just with this chart here, the Nikkei, and just this dynamic of understanding that it's not getting through resistance, which is the 618 level, this allows us to then automatically have a little bit more of a bearish outlook on US equities. So immediately we would not be piling in bullish when we see this dynamic going on in Japan. Let's keep going here. So what else do we see on this chart? Well, where's our support and resistance at? And support and resistance, you can use moving averages, but when you have a moving average band that looks like this, you see how your moving averages are kind of sideways? That's usually not a good time to use moving averages. You're in a range here. So the best thing to use in a range is previous lows, previous highs. So in this case, we're using this common low. And keep in mind, these levels were drawn in, back here. I'm just now getting a chance to show you guys. So we use this common low, and look where the low ended up being on this move here. It ended up being right at the common low. So immediately we have 2 data points that we could use to make trades in our markets here in the States. One, we have the failure at the 618. You have a lot of time here to adjust. Look how long this traded up there. That's like 10 days up there that it couldn't get through. So you'd have a lot of time to adjust and set up that trade short. The thing is, once it gets down into your level of previous support, that's your sign to go ahead and gracefully exit this short. Now, whether you choose to turn around and buy calls, that's another matter. But it certainly is your sign that this trade up here concluded down here. And you can see this chart's pretty straight up, right? It's pretty easy. This low back here, it's not really hidden. We did have another low here, but we are holding for now. And just using this chart, we can make all kinds of decisions about our markets. So let's keep going down the list here. So more actionable is where we are going next. And this is, I'm going to take you guys to China for a bit. And we're going to look at the Shanghai composite because we're getting a similar dynamic now. It's great that I can tell you about the dynamic that happened on the Nikkei, and honestly, it'll keep happening on the Nikkei. But let's talk about what's coming. So this is the setup on the Chinese market. So this is essentially the Chinese S&P. Now, why is China so important? Well, China's the growth engine of the world. China is more important than Japan. Just Japan gave us the signal. This time it's China. What's the signal here? Well, this is a simpler trading webinar, so hopefully you're looking in the correct first place. But we have a nice big daily squeeze here that's built up in the Chinese markets. Not only that, but we push down into support. We had ample time to break support here, and instead we consolidated in this range. That's pretty good action, right? When you're moving down this intensely, you need time to go sideways to properly then turn the boat around this way. It's like trying to turn a cruise liner. Cruise liners don't turn like this. They kind of turn like this. So long story short here on China, we have a messy attempt at holding support, a daily squeeze that's consolidated off of momentum lows, momentum down here in the form of the slow stochastic coming off lows, and the MACD coming off lows. So the probability of this firing higher is relatively high. And so this market here will lead my decision making when it comes to our markets next, because let's just very quickly go to our markets, right? So let's go to the S&Ps here. Well, what's the signal here, right? It's a lot less clear, right? Your momentum, you don't have a squeeze, number one. Your momentum is already trending higher. Your momentum's already trending higher here, and we've already reached some level of overbought here, right? Now, this can stay up here for an extended period of time. Doesn't mean it's a sell, but it is closer to overbought. This chart is a little bit more difficult than the Chinese markets right now. It just as the signals are less clear here. The momentum has been spent to some degree. Decent trend, but the momentum is what's drawing my attention here. Versus when we go back to China for a second, we can see that these momentum signals are a lot cleaner and a lot easier to read. And so I'm just essentially keeping an eye here on China. And if we start to see this formation turn into a bottom here with this momentum, then our markets become a buy. Because China is the growth engine of the world, they control the use of commodities, energy, things like that. They'll push the price of commodities higher. Lots of the chip stocks are correlated to China. So, long story short here, the signal for the next run, in my opinion, is not going to come from our markets. It's clearly showing us that it's going to come from the Chinese markets, and it's pretty much ready to go this week. So we'll get a directional tell on every market, in my opinion, based on this chart. So keep this one in your back pocket. So next up is, does TOS have a China symbol? I would imagine it does, but I haven't found it. I know that they have one for the Hang Seng, so that's HSI, but that one's the Hong Kong market. So it's not quite correlated. If you find one, let me know. That's why I'm showing you here on TradingView. Because I didn't find one. If you want just the ETF for China, which can work as a proxy, it's the FXI. But I prefer the index. So let's just look at a couple more things here, and then we'll go back to TOS for these. And then we'll dive into the scanner so we can start turning these ideas into trades. So there's an interesting dynamic here going on in the market, guys, and it's a dynamic that's as old as the markets, and that is the push and pull between bonds and equities. So keep in mind, guys, that when we started the session, we said, or we reminded, that bonds are much bigger than stocks. You know, if you're looking here at the stock market for your signal, you're getting a delayed signal, in my opinion, because the biggest markets are going to be bonds, Forex, and then stocks. So I do like the idea of getting signals from the top down. And so I usually will start my analysis by looking at the bond market. And essentially the way I'm looking at the bond market here is if the bonds are going higher, meaning that people are seeking safety, then that's going to put pressure downwards on stocks. And I probably won't I don't have too much more time to get into this and cover everything else we need to cover. So let's just leave it at that. That usually the way it works is stocks, or let's reverse that. Usually the way it will work is bonds up, stocks down, and then vice versa, right? Bonds down, stocks up. It's much more dynamic than that, but just for the sake of expedience, just be aware that bonds are definitely something to keep track of. They are a bigger market than stocks, and at least in the short term, they have indicated more of like a fear trade than anything else. All right, I think we're good to go ahead and dive into the scanner. Let me know if you guys have any questions so far. I was going to talk about currencies here. but I think we can do that with the scanner coming up. So let's do that. Actually, before we move on, I want to show you guys something that I'm going to offer to the group here. And this will help kind of put everything in line, right? Because we're going to cover quite a few things today. And so at the end of the session, I'll share this document with you guys. And the idea is that you can print this out. The way I've done it is just print it out on a single page, front and back. And what I do is every day, at the end of the day, I write the date, and then I just fill this out, right? I go through what is the closing value of the S&P? What was the closing value of the NASDAQ? And it doesn't matter which one you use. You can use the NASDAQ, the futures, or the ETF. But just the point of this document is really just to get you to go through each market that matters and then visually check in on the charts. Because I think a lot of things or a lot of habits that especially beginner traders may have is they'll focus overwhelmingly on their stock positions without remembering that all of these things on this list are all contributing factors to the stock position. So for example, let's say I got long Roku. Well, Roku is merely a ship on the ocean of these products, right? So if the S&P is down 50 handles tomorrow, if the Dow's down 500 points tomorrow, what are the odds that Roku's going to be higher? Pretty low, right? And so focusing here first, making sure that these guys are ready to go, and then going on to your stock makes more sense. So let's just kind of talk about this document real quick, and then we'll move on to the scanner. So the point of this document is clearly not to be a comprehensive anything, really. What the point of this is just to have a daily checklist of all the things that matter. So we're going to start off with the S&Ps, the indices up here. We're going to have all 4 American markets. We're going to go to Nikkei, Japan, DAX, Germany, and then China. So we get all our world markets covered, essentially. And sure, I left out Australia, Brazil, but they're not important. We then go to the dollar index because it's important to understand the value of the dollar, bonds, junk bonds, oil, copper, signifiers of growth, semiconductors index, and I provided all the symbols for it. This one should have TRAN, not TRA. Bank index, so what are the banks doing? Obviously important. What are the transports doing? Keep in mind when you go to, this has a misspelling, it should say money sign TRAN. Biotech, not super important, but kind of a leading indicator for risk. And then on the second page, we have the internals. And this is where it gets a lot more, well, I won't say it gets more fun, but it certainly gets, it reminds you to look under the hood, essentially. And so for these values, I have the 10-day value or the 10-day moving average of the P call. So this is something John uses quite a bit. And I've seen him use it so successfully that I had to include it in this list. These levels right here are really important, guys. So you just write down the 10-day moving average of the P call, the trend, the advanced decline, skew, fix, and volume, right? And you may not even care about some of these, and that's okay. Like I don't care about the skew as much, and you may not care about the trend, and that's okay. But I still would recommend going through the list and just populating the charts or populating the values here because it'll get you to look everywhere that matters. And then by the time you're looking at a stock, you'll have, what's it called? You'll have muscle memory of this time, and I think it'll help with the decision making. So I'll provide that to you guys at the end of the session here. So let's go to the scanner next. Trump tweets did not make the list. I probably would need an entire list just for Trump tweets. All right. So let's dive into the scanner. If you guys have any questions, I'm happy to answer them. Do I look for bonds in other countries or just the U.S.? No, I really just look at our markets. I tangentially know what the German bonds are doing. Because they're the bankers of Europe, and so I do. If you were going to follow bonds from another country, I would say just follow Germany and Japan, and I think that'll get you covered. But no, I primarily just follow our bond market. So here's the simpler trading scanner. Honestly, guys, I'm not a salesperson. I'm a trader. I show up and I trade. I don't really care about anything else. But this is probably the most helpful tool outside of the indicators that I found here. And the reason it's so helpful is because it saves me my most valuable commodity. Time. It's the one thing we can't get back. You see how it's disappearing on my screen? That's exactly what it's doing in real life. We can't get that back. And time is of infinite value. So this saves me time, and therefore it's one of the most valuable products we have. So I'm going to go through this scanner here, and I'll show you some of my favorite scans. Of course, there's tons of scans here, but I'm going to show you some of my favorite ones. So usually on a Sunday or a Saturday, usually a Sunday, when I'm doing kind of some homework for the next day for the open, I'll typically start off by looking at weekly early warning scans. So when you do that, you're really just trying to get weekly squeeze setups. So these are going to be best for more of like a swing trader's perspective. These types of setups are better for your types of traders that like to get in on a trade on Monday and then maybe have it run for 2, 3, 4 weeks. If that's your style, then this is probably your place to go. So here we have a list of all the things that have pulled up. One thing I want to draw your attention to is on each one of these windows, you'll have an eye icon over here. And this will tell you what this scan is looking for. Because weekly early warning, who knows what that means, right? But if you just hover over the eye, it'll tell you what the parameters are. And so the parameters for this one is basically just a weekly squeeze setting up but has not fired. So in the same way that we would look for daily squeezes, this time it's a weekly squeeze, just means it lasts longer. Once you have your symbols here, what I like to do next is organize them by open interest. And so that will give us our most liquid names at the top, and then it just gets a little bit less liquid as we go down the list. And usually I'll just focus on, the most liquid names. I don't really care if it's a liquid. And so just right off the bat, we can see the AT&T, Petrobras, Vale, Pfizer, Netflix, Gilead. These are all in multiple squeezes here. So we already automatically have some names to add to our list, right? And I did this yesterday. So, this was partially some of the names that I added. But one of the names that I added here was AT&T. I looked at the chart. What got my attention was this early warning. And Verizon should be on here as well. Maybe Verizon's squeezed already. Okay. Anyways, so from here you can kind of choose your trading vehicles. Now, one thing that I do like to do here, since we are starting with a macro point of view on things, is we can start to draw some conclusions based on what we're seeing, right? So just based on the industry. So AT&T, telecommunications, PBR, energy, Vale, metals, Pfizer, health, gold, metals, Netflix, tech, biotech, tech, not sure, tech, or biotech. So what are we seeing? Well, we're seeing a couple of biotechs and we're seeing a couple of techs, right? And so kind of automatically we can start to kind of skew our thinking that way. Let's keep going. Another one of my favorites here on the weekly scans is the weekly bullish continuation. So we won't get into this one too much, but it's kind of the same idea, except this one is factoring in momentum waves. So on the other one, it was just a straight up weekly squeeze gets you qualified. On this one, it's a weekly squeeze plus a combination of momentum. And the key thing with that is the momentum has to be oriented higher, and you have to have, a weekly squeeze. And so let's do the same thing. All right, so here's Verizon. I knew I got it from somewhere because I had a choice this morning between AT&T and Verizon, and I ended up going with Verizon. So I kind of look at these two scans the same, the weekly early warning and the weekly bullish continuation. Maybe give this one a little bit more weight since it's already telling you that the momentum parameters are being factored in. So you know that everything here in this scan, as opposed to the last scan, not only has a squeeze, but then it's already a bullishly oriented squeeze going into it. And so we get kind of the same list, right? First thing you might notice is, well, Pfizer showed up twice. So not only is it a squeeze, but it's bullishly oriented. In the previous list, we had AT&T. This time we have Verizon. So telecommunications is a focus as well. This one is a biotech. Here's Merck. Not a biotech. Merck is pharmaceuticals. J&J, health. CVX. And then some more tech. So we already would have enough names to add to our list. I mean, just from these scans that we've ran, we should be having Pfizer on our list, either AT&T or Verizon on our list, and maybe another combination of a tech and a healthcare based on what we're seeing here. Next up is probably the most used column, and that's going to be the daily bullish squeezes. Now, the most helpful ones in this column are probably the daily bullish continuation. So it's the same idea as what we just looked at on the weekly, except this time it's just a daily. And keep in mind the way that the squeezes work is once you have a squeeze, right, let's say that these are red dots, and then you get a green dot, usually the squeeze will go after it's fired on that green dot. It usually goes 8 to 10 bars. So whether that's weekly bars from the last scan, which means it's a longer lasting squeeze, or whether it's 8 to 10 days for a bullish daily scan, just keep that in mind. So same exact process here, just open interest, looking at all the different names. Again, we get, I think this is Sprint. So all the telecoms are popping up on our list. You notice that, right? And so from there, we immediately know, okay, the telecoms seem to be doing something positive here. We have Sprint, we have Verizon, we have AT&T. We immediately can have 3 names to look at, and then from there, I would just narrow it down to the best setup of the telecoms. I already did. I took Verizon, but that's kind of the thought process. A lot more names here that we would normally trade. You know, these are names that you guys probably will see in the gold room all the time. WDay, Adobe, Team, PayX, and these are all in daily squeezes. So very good scan there. Just because I think this is such a cool one, I'm going to show it to you, and it's daily pop squeeze. So the daily pop squeeze here, it's kind of a, we only have 2 results here, right? And the reason that is because the parameters for this search are a lot tighter. This one is not only looking for daily squeezes, but it's looking for short percentage, right? So we can see here that not only is match, for example, in a squeeze, but it also has an astonishing 39.5% short interest. That's a lot. So let's say that the market, let's say the NASDAQ's up, let's just be kind of ridiculous with it. Let's say it's up 3% tomorrow, the NASDAQ. Then match will likely not only have natural buying and selling, but then you have all of the benefits of the squeeze, and then you get the added kind of burst or fuel from the short interest, right? Because if these shorts are wrong on their timing, as the stock goes higher, they have to keep covering. So it creates kind of a cascade upwards as they cover. So this is a really interesting column. I already have a position in match, just kind of as a function of this dynamic here. So really interesting one. For the intraday scan, it's the same exact idea, but this is really just for your more so for your intraday traders who want faster in and outs. Really, it just depends on your personality. If you like slowest, we have weekly, daily, intraday. You can choose your speed, but the idea is the same. Another one that you shouldn't miss out on here is the Growth 250. So this is just a special dedicated list. I think this comes from IBD, and you may get different results here than you did up here. So I always recommend going through at least the daily squeeze on the Growth 250 here. You can obviously, do whatever you like, but daily squeeze for sure. And then lastly, we have the MTFA. And the MTFA is pretty helpful. The MTFA is kind of like, if you like the macro conversation that we started the session with, then you'll probably really like the MTFA. And the reason is because we have all our stuff here that we care about, bonds or notes, bonds, Australian dollar, Canadian dollar, copper, all these things that are on the list that I'm going to give you at the end of the session are here. Now, granted, this is kind of, the Fisher Price setup of just up arrows and green, but it does help you understand different time frames, right? Because as simplistic as this looks, this is telling you the setup on multiple time frames. And so whenever you have a clean setup like this, something like bonds, well, then this is a market to focus on. Same thing with the Australian dollar for that matter. It doesn't have to be green arrows. You can focus on shorting things. And the Australian dollar has a lot of correlations as well. So if you're a macro person, just understand the Australian dollar correlates back to metals. It correlates back to China. It's a very commodity focused currency. So when you see commodity currencies like this, you know that commodities, at least in the short term, are likely under pressure without even having to look at energy or metals or anything else. Same thing with the Canadian dollar. Just Canadian is less mining and more energy. But you can see how these two are look the same. So let's keep going down the list here. Everything basically that I would want to look at, you can find here in the MTFA. And the cool thing is whether you choose to fill out the exact values like on the list that I'm going to give you, or if you choose to just use an arrow system and use the MTFA to do it, I think it works just as well. Because at the end of the day, the point is not to care about what's going on with copper futures, for example, but to understand the importance of something like copper futures when it comes down to the Dow, for example. Because, you may hear that copper futures or copper in general's kind of Dr. Copper. It kind of takes the temperature of the global market. Copper does as a leading indicator. So if you start to see copper under pressure, either up or down, you know that that's a little bit of an information edge you have when trading the Dow. Let's keep going down the list. So this is everything we would look at. If you keep scrolling, however, you're going to see all of the top stocks. And it's the same exact idea. So just very quickly here, I have a position in Amazon that I opened today. Looks pretty good across the board, right? The difference between this arrow here, you see how it's just a single arrow? And then you have like a arrow, I don't know what this is, looks like a play symbol. And then another arrow. This is telling you that this is in a squeeze. So this just means it's oriented up. When it's just a standard arrow, it just means the daily is pointed up. But the lower term time frames, like the 78, the 35, pointed up and in a squeeze. So those are kind of an early warning system. And the cool thing about this is you can find this, it's essentially a snapshot of all the stocks that we would normally care about. You have your Googles, your Netflixes, and then the best part, in my opinion, is down here at the bottom. And the reason that is because we get a snapshot of everything. Like once you kind of learn to read these, it'll read like a picture, and then you'll just see the totality of this and understand what to do. But these are all the sector spider ETFs. So you have energy, financials, industrials, tech, consumer products, and utilities. And again here, just the same exact idea is you can see here on a daily time frame, should we be focusing on energy? Maybe not so much. Should we be focusing on industrials? Maybe not so much. Where should we be focusing? Well, we should be probably focusing down here on these three: tech, consumer staples, XLU. However, the cool thing is that if it starts to change down here, then you can also retroactively apply that here. Hope that makes sense. So let's see. All right, so let's go ahead and move on to creating a watch list here. Now I've already gone through and created a watch list based on the results that I got from yesterday. So let's go through it. So what was one of the themes that we saw when we started doing these scans here, especially on like the weekly and the daily scans? Well, one of the themes that we saw was telecoms. AT&T and Verizon and Sprint all showed up on the list. Here's Verizon, for example. So let's just kind of use that example in our next example, right? We know that telecoms and tech are working well together. We haven't even looked at a chart yet, and we know that. And that's kind of the point, is to be able to have that understanding before you dive into the charts and then work from there. So telecoms and tech are working well together. Verizon, AT&T, and Sprint are our results. So let's take those results, go to toss. So let's kick it off with Verizon. Actually, let's just go back for a second here. So there is a key here on the MTFA, and you can see what it all means here. So when you have like a faded one, it just means it's less strong than a solid one. I'm thinking we need a different system for this. Maybe we could just use the word squeeze. I mean, would it be outlandish to just have the word squeeze here? Maybe not. But yeah, you could see this. You could see the key up here at the top of the page. All right, so we're looking at telecoms, and our list gave us three names: AT&T, Verizon, and Sprint. And keep in mind that they all came from weekly timeframes. Some of them did have daily setups, but most of them were weekly timeframes. So let's kind of look there first. So let's look at Verizon first. Now, keep in mind, guys, the way that we're doing it here, we're taking an idea of telecoms and techs and trying to find the one name that we think looks best out of those three kind of big picture ideas. Normally, your watch list is going to be more nuanced, right? Normally, you're going to have not only these three telecoms, but then you would probably have something like, Pfizer, maybe something like Dropbox, MetLife. These are all things that popped up on the daily scanner. Match, Viacom, PayX, things like that. But let's just use this example. So Verizon here on a weekly time frame. Well, what do we see here? Would you say that this is a trend or no trend in terms of the what's going on here? It's a little bit tough, right? It's a little bit tough because you do have some level of trend, right? But you really only have trend in your long-term moving averages. You see how the longer term, so just so you guys are aware, the white line is the 8 exponential moving average. The green line is the 21 exponential moving average. The blue is the 50 simple moving average. Orange, 100 simple. Red, 200 simple. So you do have trend here in your longer term moving averages. And by trend, I just mean that they're being respected in terms of support and resistance to some degree, and they have a dedicated angle, right? They have an up angle. They're not sideways or like this. However, your short term, your 8 and 21, a little bit mixed here, right? It's a little mixed. Why is that? Well, because you're really just trading in a range here. You know, look at this trading here. If you bought it at 58 in November, where is it at now? 58, right? You buy here, what's it done? Nothing. The good thing is, without these periods of nothing, because, you know, that's one way to think of it is, well, yeah, price isn't doing anything, you know, move on. But look at the totality of this. We have an impulse up. We have a consolidation. That consolidation allowed the squeeze to develop with the idea that we could break out of the consolidation to the top end. Right? So there's a lot going on here with this chart. The main thing that I'm seeing here on the weekly is that we are now above the 8 and 21 on the weekly. There's a 618 here from high to low. So in the exact same way that we were looking at this on the Japanese markets, where you take the absolute high of your range and your absolute low, you see how all of the price action here, this is the swing here. You see how all of the subsequent swings are within the context of this major swing. So that's our swing. High to low, 618 is right at 58. So in my opinion, putting it all together, well, actually one more thing, let's keep going. So we have the squeeze here, check. We have 8 and 21 holding, check. If we zoom in here on the RAF, So the Ready Aim Fire, which is an amazing tool, by the way. I don't really even know how I traded before I learned RAF. It's a three oscillator system, but the way that David Starr has programmed this thing, he's made it incredibly nuanced. It's one of the best things we have. And the cool thing about it is it works really well with the squeeze. So what do we see here? Well, we have a weekly squeeze and we have a mid-level RAF. Now we don't have a major buy yet, right? We have a medium buy or a moderate buy that's the blue arrow. We don't have this green arrow quite just yet. But the idea here is that we have a ready, we have an aim, we have a preliminary buy signal, and really all that's missing is that major buy signal. And this is actually a setup you'll see in the gold room. I think maybe Danielle would use it the most. I've just heard her use it the most. And it's when the RAF is in the mid-level like this, it's right at 0, and you're in a squeeze. Then it's basically a mid-level squeeze buy. So putting it all together here, there's a couple of things you have to look for with charts. First of which is trend. Second of which is support and resistance. And we do have tools for that. If you are newer to the markets and you don't feel too comfortable with support and resistance, because resistance would be like 61, right? You just previous highs, your support right around 53. You have another support at 54. You do have Fibonacci support at 57. So you could do support quite a few different ways. If you're new, however, and you would like a indicator that will plot it for you, and the best part is that it's free and it works really well, then look up Darvis. DARVAS. So if you look up Darvis on Simpler Trading, you'll pull up our Darvis indicator, and it will automatically draw these support and resistance lines for you. So the first thing to look for is trend, and that's okay. Second thing to look for is support and resistance. In the multitude of different ways that you can get there, right? Support and resistance can be these, just previous highs and lows. It can be Fibonacci. In this case, there's the resistance level at 58. Or it can be the moving averages, right? In this case, the moving averages should be acting as support and resistance as well. So lots of different ways to do it. They're all important. You have to know when to use which ones. We don't have time to get into it today, but that's part of the whole experience of being here. Next thing, trend, support and resistance. Next thing, what does your momentum look like? Well, you have decent momentum here. You're not buying a cycle high. You see back here how you'd be buying essentially kind of a cycle high? And then if you buy the cycle high, what's the downside of that? Well, at best, once it rounds back to neutral, keep in mind all of these things will go above 0, below 0, above 0, below 0. It's just the cyclical nature of markets. Buying the cycle highs up here, if someone had, let's say they bought here, well, at best, they now have to sit through this. So we want to avoid that, unless you have like an iron condor or something, but you want to avoid that. So we can do that by just waiting for these opportune moments when the momentum will neutralize. And so on this one, we can see that we have the squeeze, mid-level RAF buy, and momentum cycles near lows. So Verizon looks pretty good to me here. And yeah, it did have a down day, but it looks pretty good. And I'm just doing like a deep dive here so I can do the next two a little bit faster, but just so you guys are aware of like the things that we would look for, from moving averages to Fibonacci to momentum. And that really is kind of as simple as it gets. I know that maybe I'm oversimplifying it to some degree, but really, it really is no more difficult than that. And I would actually suggest maybe writing that down on the sheet that I'll provide. The checklist is just trend, support and resistance, momentum. And just remembering that. So, you know what, let's go ahead and move on here. Verizon looks pretty good to me though. So the next one was AT&T. And again, this is a weekly chart. Not quite the same dynamic here as Verizon, right? Verizon was really more of a consolidation near highs with the play to break out of those highs, right? So Verizon was a different chart, even though they're in the same industry. So Verizon was up here somewhere, with a consolidation, with the idea that it can break out. Here we actually have quite a different dynamic, right? We have a strong downtrend, but underlying that strong downtrend is something different that we haven't seen for a while. Keep your eyes on the 50 here. So you see how we have trouble closing above the 50? We did here for one day and then went back. And then just follow that 50 all the way down. See how we get close? We get close here. Don't touch it. And then we finally get through. Right? So that's a change. Not only did we get through the 50, but look at what happened to the moving averages here. Because price just getting through the 50 is a change, but then not only did price get through the 50, but the moving averages have now flipped. And now you have the 8 acting as a little bit of a safety cushion as it guides its way higher, the 21 underneath that, and now the 50, which was a moving wall, is now at the bottom. So this is the seedlings of a trend reversal, right? You can't have a trend reversal without the seed here first, where the moving averages cross positively, the fast over the slow. Not a perfect trend by any means. Verizon has the benefit of having the 100 and the 200 down here as additional supports. Here we don't. Here they're going to be resistance on the way up. But different type of play here, right? Different type of play. So on this one, what do we see? Well, we have a very similar setup to Verizon, right? We have a weekly squeeze. This one has triggered already. We have major RAF buy signal here. So it was a little muddy in there. You got a major buy, you got a major sell, and then you got a major buy. But kind of using all the context clues here, I give more weight to the buy. So squeeze fire, that's a check. RAF mid-level momentum, that's a check. Because you see how the momentum was high, dipped back down to 0, carved out a bottom, and can now go this way, instead of buying it like up here if it was trading up here somewhere. So AT&T looks good to me as well. Now, if you're more of a trend trader, this may not be for you. This is more of an exhaustion trader, or, someone that would trade more of a low. This is much closer to the lows. Your high would be somewhere around 42. So let's go to the daily, and then so the daily is actually really intriguing here as well on AT&T. And the good thing is that regardless of which one you choose at the end of this, as long as they all kind of play well together, it really doesn't matter, because AT&T, Verizon, and Sprint, for that matter, should all behave as long as they all behave. Not to say Captain Obvious here. So let's kind of finish up the thought here with the daily chart. So what do we notice here on the daily? Well, kind of the same dynamic, right? Ever since right about here, you see how the 200 has been containing price? Something changes right about here, and it should get your attention. Granted, it wasn't immediate, but look at where we are now, which is what matters. Your moving averages have very quietly formed themselves into a bullish setup, right? Very, very quietly. And so the last one that's missing here is the 100 being over the 200, but that's going to happen last. And so just having this little structure combined with that weekly squeeze makes this a buyable chart. All right, guys, so I'm going to skip Sprint here. I just wanted to give you guys kind of a rundown as to a quick way of building a watch list and then kind of trimming the fat, if you will. Now, I think that this would be maybe a little bit easier to have highlighted if we had radically different industries. So let's say that we had looked at some energy versus some healthcare, for example. Well, you're not going to get as much similarities here. But when we're looking at just telecoms, this is a good way of kind of choosing between similar things. And so really at the end of the day, what we just did here with these two stocks in terms of understanding, what do we need to understand first? We need to understand trend. and short-term trend. We need to understand momentum and try not to buy momentum highs or short momentum lows. And then we need to understand support and resistance levels. And so if you can do that after having kind of followed the steps with the watch list, you're on a very good track. All right, so let's just kind of wrap it up here with, I got about 5 minutes left, and I do want time to share that document with you guys. So let's go ahead and take this Verizon idea to the execution desk and see how we would set up a trade with this. One thing that I want to point out here, obviously we went through Verizon with some detail, and we know it has a weekly squeeze. No daily squeeze here, right? I don't really mind as much. That's okay. What I do like, however, on Verizon is you see the histogram on the squeeze is printing negative, and it's moving upward. So if it can gain, excuse me, if price can go up with the squeeze in negative territory below zero, that's like having a full tank of gas by the time it gets back to zero, because what exhausts your expansion, or as prices expand and then go back into contraction, what will exhaust that is when you're up here. You see how the difference between this momentum peak and where we are now? So essentially this was kind of a peak, cycle low, small peak, small low, and we are here. And so that's the thought process behind Verizon. So let's go ahead and take it to the execution desk here. Let me just load up a platform. In the meantime, I'm going to see about uploading the file to the room drive, and you guys let me know if it works, because I haven't usually shared that way. Okay, so here we are on Tasty, and we did all the work on Verizon. So how can we turn that into a trade? Well, a couple of points, right? Now, keep in mind, if you followed my session this morning in the beginner room, I did the July series. And the reason I did the July series, hopefully I explained in the room, but let's just assume that we don't have Fed this week, and let's just assume that we don't have G20 at the end of the month, right? Let's just assume that we're trading this chart in just a total vacuum as much as possible, just for the example. We have a weekly time frame set up here on Verizon. So whenever you have a weekly time frame like this, you really do need to give yourself some time. And frankly, 32 days is not the full amount of time to give yourself. This is the series that I'm in right now. Now, granted, I'm not in this for the full bite. I'm just in it for hopefully the first dot of that weekly squeeze. So let's just kind of work with the idea that we're trying to get a big bite out of that weekly squeeze. How much time should we give ourselves? Well, I would certainly on this series, between July, weekly, we go from monthly July to weekly August. Kind of the natural place to land here would be September. So I'd go out till September, and then from here, we then start to choose what strikes, right? Now, we know that at least there is some level of resistance here, right around here, right? From about 60 to 61. You can see, if you can, my terrible drawing there. About 60 or 61 is your resistance. And I would say that this 57 level is the absolute low that I'm willing to pay on this, or the absolute max that I'm willing to give this trade, right? If it closes below 57, I want nothing to do with this. So I'm working with around 57 to about 61, 60 or so. So let's kind of work with those parameters. So if I'm going out to September, I'm usually going to be doing a vertical of some kind. And just so you guys understand, the reason why is you want, if I'm going to give myself this much time, out to September, I don't want that theta to just be draining my let's just say that it just kind of chops around here for a little bit. I don't want the theta or the time decay to kick in. It shouldn't very much with the September, but you can balance all that out. So I would choose to do a vertical here. And in terms of the long call, you could certainly do 55, 60. And I think that's a fine trade. You could even do 57, 62. Granted, that's out of the money, but we're giving ourselves until September, and we have quite a few catalysts. So really, it's just your risk temperance. If I were to make this adjusted trade, I would do this one. And just because it's, if I'm sending something out to a large group of people, you kind of have to factor in safety. And I think this is a good safe trade. So basically we would buy the $55 call. It's a 71 delta, so it's right in the sweet spot of where we usually will buy a call. Let's just say that we just wanted to buy a straight up call and nothing else. We would probably still buy this one because we want to be buying those 70 delta calls. So we buy the 55. We sell the 60. And honestly, you could even sell the 62. Let's price that out. I actually like that. It's so close. I wouldn't mind either one here, guys. Like if I did 55.60, I would probably do 2 orders. If I did 55.62 and a half, I would probably just do one vertical. But let's just work ahead with this one. So I'm kind of wishing I had done this trade instead of my July trade now. Anyways, let's we buy the 55, 70 delta. We pay about $365 for that, which is the mid price of these two. We sell that 60 call as time protection, essentially. That allows us to get a credit of about 106, reduces our cost down to 259, and then our max profit here would be about 241. Now, you can play around with those numbers, but that's the trade setup that I would do. All right, guys, so let me know if you guys have any questions. I think we covered pretty much everything I wanted to show you. We started off by looking at the Japanese markets just because they were a leading indicator. We then moved it to the Chinese markets because I think that they're telling us what's going to happen here in the next 2 weeks with that daily squeeze that's setting up there. We talked about bonds, which is the biggest market, currencies, second biggest, and then stocks. So never forget that so that you can follow top to bottom. We talked about the scanner and all the different scans. We talked about how to make a watch list using big picture ideas from the scanner. So if you start to see commonalities between sectors, usually it's a good place to focus. In our case, we found telecoms, healthcare, and tech were the primary movers. And then we showed how to go through the charts, kind of using the simpler method of understanding your trend, whether you have one or not, right? You won't always have trend. If you don't see the trend right away, you don't have one. Like on this daily chart of Verizon, I don't see a trend here. You just have, looks like spaghetti noodles running through my screen here. And that's okay, right? Some things don't have trend. But it's important to know when you don't have trend so you're not forcing trend on something. So trend number one, your support and resistance based on Fibonacci or previous highs and lows. And then what does your momentum profile look like? And notice I said momentum profile. Momentum profile just factoring in the squeeze. I would imagine most of us here are using the squeeze. RAF or any oscillator that you do use, if you don't use the RAF. And then whatever momentum indicator for trend that you use. In my case, I use MACD. So this is your momentum profile. I just want to make sure that all of these are good. So you have to have a check on trend, a check on your support and resistance, and a check on your momentum profile. And if you have all three, then the next step is to take it to the platform to execute the trade. So let me go ahead and upload this document for you guys. It may take me a second because I am computer illiterate, even though I'm probably don't sound like I am. Okay. So I think it's been uploaded. If you guys go into the top right-hand corner of the room, you should see, up there where the sound is, you should see a folder. If you hover over it, it's called Room Drive. And if you click on it, The first document should say daily checklist.pdf. And if somebody could let me know that they successfully downloaded it, then I think we're all set. Awesome. Awesome. Thanks, Mark. So this is, let's close out with this, because at the end of the day, even if you, let's say that you have a couple of, well, I won't make that joke, but let's just say that you forget everything I've said today. Hopefully this will kind of guide your trade here. And just keep in mind, guys, this is just something you can fill out whichever ones you think are helpful. But in reality, I think it's all helpful. And you don't have to spend too much time on it at all. But the point of this, put the date here. The point of this is just to have you touch base on all these markets that matter. Briefly, it shouldn't take you more than maybe 10, 15 seconds per line just to put in the value. And then maybe you could write in a little thought next to it, like, oh, good trend on this, bad trend here. Especially focus on the internals, because, this is probably not something that's in a lot of folks' heads, is the internal stuff. And then take this with you to the next morning. And I promise you it will help orient your trade and kind of structure your way through the market. So hopefully you guys get good benefit from that. I'm just going to hang out here for another minute. If you guys have any questions for me, just go to the top right-hand corner here, TK. So let me see if I can bring up my room. So you should be able to see it on the screen now. If you go up here to this folder and you click on it, it should say Room Drive, and it should be the checklist.pdf. Awesome. Good to hear. Awesome. All right, guys. Well, I didn't see any questions come through. If you guys are members of Simpler Trading, I do the open session in the beginner's room every day. So that'll be at 8:30 tomorrow morning. Stop by, check us out, bring some questions for us, and we'd like to talk to you. But thanks for joining me today, guys. I always have fun doing these. I love talking markets. I love the top-down approach to markets, and then taking those big ideas and turning them into trades. That's my favorite thing. So hopefully, if that strikes a chord with you, this will help you kind of get oriented for the rest of the trade this week. All right, guys. Thanks for joining me. This is recorded, so it'll be posted at the end of the day. Thanks very much, guys, for joining me. I hope you have a great rest of your Monday evening, and I'll see you tomorrow.